pleasant day to everyone. Today we will discuss all about the different sources of finance. To start with, I just want to say that I really appreciate your effort to watch every video about our course for you to learn every detail na kailangan ninyong malaman. And I also appreciate your effort in asking questions kapag may mga kailangan kayong linawin for your deep understanding about the topic. So moving forward, we already have mentioned on our previous presentation that one of the tasks of the financial managers is to source funds for the organization or for the specific project of the firm na kinakailangan nilang pondohan. So with that, the manager needs to think critically and deliberate options intelligently to meet the effective decisions for the company. Choosing the right source and the right mix of finance is a key challenge for every finance manager. For analyzing and comparing the sources, it needs the understanding of all the characteristics of the financing sources. So there are many characteristics or the basis of which sources of finance are classified. It can be classified on the basis of the time period or as a long term or short term. So thus, let us know first kung bakit nga ba kinakailangan ng isang company na mag-source ng fund at saan nila ito gagamitin. One of the reasons why organization needs to source finance is that for it to sustain long-term financial requirements. These long-term financial requirements of the company is also called fixed capital requirements. Long-term financing is a mode of financing that is offered for more than 1 year. It is required by an organization during the establishment or expansion or technological innovation and even research and development. In addition, long-term financing is required to finance long-term investment projects. Long-term funds are paid back during the lifetime of an organization. So long-term financing means capital requirements for a period of more than 5 years or 10, 15, or 20 years or maybe more depending on the other factors. So take note that capital expenditures in fixed assets like plant and machinery, land and building, and other fixed assets of business are funded using long-term sources of finance. Another reason why organization needs to source fund is to meet its short-term financial requirements or those working capital requirements. Short-term financing means financing for a period of less than 1 year, and the need for short-term finance arises to finance the current assets of the business like an inventory of raw materials and finished goods and others. Now let us see the different sources of finance. Sources of finance of the organization may be classified based on the period, based on the ownership, and based on the source of generation. Let us focus those sources of funds based on the period. When we are talking on the sources of finance based on the period, we will always encounter the short-term and the long-term sources. When the finance mobilized with large amount and the payment period will be more than 5 years, it may be considered as long-term sources. Share capital, issue of debentures, long-term loans from financial institutions and commercial banks come under this kind of source of finance. Again, let me reiterate that long-term source of finance needs to meet the capital expenditure of the firms. Apart from the long-term source of finance, firms can generate finance with the help of short-term sources like loans and advances from commercial banks, lenders, and etc. So this source of finance needs to meet the operational expenditures of the business. Let us discuss the different sources under this term. So we have bank credit. It is usually referred to as loan given for business requirements or even personal needs to its customers, with or without a guarantee or collateral, with an expectation of earning periodic interest on the loan amount. So one of the sources of finance if the company needs funds for their short-term requirements is the bank credit na ino-offer ng iba't ibang commercial banks sa mga negosyo. Another one is the customer advances. That means amounts arises from the operations of the business that have been billed and collected by seller as the closing date. When the business organization have billed and collected the customers who purchase their products and or services is one of the short-term sources as well. Trade credit is the another one, which is the another short-term source of finance. This is the credit extended by supplier that allows the company to buy now and pay it later. Anytime na ang isang company ay nagpapadeliver ng materials or equipment or other valuables without paying in cash on the spot, they are using trade credit. Another one is the public deposit. It refers to the unsecured deposits invited by the companies from the public mainly to finance working capital needs, and most of the time the publicly listed organizations utilize this source. They allow public individuals to invest on their company, and with that the organization can able to generate funds. Money market instruments are securities that provides businesses, banks, and the governments with large amount of low-cost capital for the short time. Money market funds are mutual funds designed to be a low-risk, liquid, and short-term investments. So these are the short-term sources of finance. Now let's move on the long-term sources. One of the examples of long-term sources is the equity shares. An equity share, or normally known as ordinary share, is a part ownership where each member is a fractional owner and initiates the maximum entrepreneurial liability related to a trade. When we say fractional owner, it is an arrangement where a group of people share the ownership of an asset and also shares the certain rights for the use of the assets. Take note that these types of shareholders in any organization possess the right to vote. The next one is the preference shares. These are shares in any company that are owned by people who have the right to receive part of the company's profits before the holders of ordinary shares are paid. For those ABM graduates, maybe napadaanan na ninyo itong mga sinasabi ko, but for those non-ABM graduates, kapag sinabi nating preference shares, ito yung shares na pinangahawakan ng mga nag-invest sa isang company kung saan mayroon silang nakukuhang part ng company's profit after ma-distribute ang dividend ng mga equity shareholders. Another one is the debenture. It is an instrument used by a lender or yung nagpahiram or yung nagpautang such as bank when providing capital to companies and individuals. It enables the lenders to secure a loan repayments against the borrower's assets. So even if they default on the repayment. In this type of source of finance, the organization should present the surety or collateral to the lender. Long-term debt is the another long-term source of finance ng isang organization. So it refers to the debt that matures in more than 1 year. Entities choose to issue long-term debt with various considerations, primarily focusing on the time frame for repayment and interest to be paid. Another one is the fixed deposit. It is a financial instrument offered by banks which gives investors a higher interest than the regular savings account until the maturity date. So one of the sources of the long-term finance is the fixed deposits, where the business organizations can receive high interest rate. This one of the main difference of fixed deposits to a regular savings. So different commercial banks offer this type of sources of funds to help investors recognize high interest of their deposit until the maturity date of the deposits. Let us now move on the different sources of finance based on ownership. When we are talking on the ownership source of finance, it could be a share capital, retained earning, surplus, or profit. Kapag naman ang mga borrowed capital ang pinag-uusapan, it composed of debentures, bonds, public deposits, and loans from banks and other financial institutions. Share capital is the invested amount by a company shareholders for use in the business. But please take note that share capital is different from shareholders' equity because it does not include retained earnings. It is made up only of the equity owners have put into the company by purchasing shares. The next one is the retained earnings. These are the portion of the business profits that are not distributed as a dividends to shareholders but instead are reserved for a reinvestment back into the business. So normally, ina-allocate ng company ang retained earnings for the purchases of fixed assets or para mabawasan ang kanilang mga long-term debt obligations. The other one is the surplus and profit. When we say surplus, it is the amount which remains when company needs are satisfied or when a limit is reached, while profit is the total income or cash flow minus expenditures of the organizations. So most of the time, profit ang pinaka-source of fund and even savings ng isang organization. That's why we have said to one of our video presentations that profit maximization is one of the ultimate objectives of the financial management. So let's discover now the different borrowed capital as source of finance ng isang organization. So katulad ng mga sources of finance based on the period of time, borrowed capital also includes debentures, bonds, public deposits, and loans from the banks and other financial institutions. We need to consider the truth that these sources of finance, whether they are in long-term basis, these are still the borrowed capital. And what I am trying to emphasize is that the business organization should have an associated long-term debt obligations to the sources because these funds or capital are just borrowed from the external sources. So aside from the period of time and ownership as the basis of sourcing of fund, the sources of generation should also be considered. These sources includes internal and external sources. So when we are talking all about internal sources, it includes retained earnings, depreciation funds, and surplus. On the other hand, those external sources are share capital, debentures, and public deposits, and loans from banks and other financial institutions. So we do not need to elaborate these sources further since I have already mentioned this kanina. The important thing to remember is that the different sources of finance of the organization have been categorized into different bases. Again, these sources can be based on the period, based on the ownership, and based on how the organization generated these funds. So let us move forward to the discussion of security finance. We need to understand that if the finance is mobilized through issue of securities such as shares and debenture, it is called as security finance. It is also called as corporate securities. This type of finance plays a major role in the field of deciding the capital structure of the company. Please take note that in financial management, security is neither pertain of being secured nor people. A security is a financial instrument, typically any financial assets that can be traded. The term broadly covers all traded financial assets and breaks such as assets down into three primary categories. So we have equity securities, which includes stocks. We have debt securities, which includes bonds and banknotes, and we have derivatives, which includes options and futures. By the way, options and futures are both contracts. These are another important terminologies na mapag-aaralan ninyo sa financial management, pero most commonly may encounter nyo yung term when you are studying international or global finance. So to make it clear, ang security ay isang financial instrument at kapag ang financial aspects ng isang company or ng isang business ay nagmo-mobilize through securities katulad ng mga nabanggit ko, they are engaged in security finance. Let us see what are the characteristics of security finance. Security finance is characterized by the following. Number one, it is a long-term sources of finance. Take note that security finance is always categorized to long-term sources of finance. It means that this source of finance which can be obtained in external parties can be payable by the organizations in more than 1 year. It is also called as corporate securities. So, while you are studying financial management, if you will encounter the term corporate securities, it pertains to the security finance. Kapag sinabi natin corporate securities, these are the commercial paper and some of the examples are the draft, notes, and checks. Another one is the security finance includes both shares and debentures. In this type of sources of finance, dahil nga ang sabi natin ay kabilang siya sa long-term category, this commonly includes shares and debentures. Shares and debentures, as we discussed a while ago, are the examples of long-term sources ng finances ng isang organization. Another characteristics is that it plays as a major role in deciding the capital structure of the company. Security finance, as one of the contributor of the organization in terms of capital structure. So when we say capital structure, it refers to the amount of debt and or equity employed by a firm to fund its operations and finance its assets. So we will have a separate discussions of capital structure. One of the characteristics of security finance is that the organization's repayment of finance is very limited. It is a major part of the company's total capitalization. So if we will look to the financial position of the company, we will see that the major part of the capitalization of the company normally came from security finance. Now let's have the different types of security finance. Security finance are categorized into two types. So we have ownership securities or capital stocks. It includes equity shares, preference shares, no-par stock, and deferred shares. Number two is we have creditorship securities or the debt capital, and it includes debentures and bonds. So I decided not to discuss further in this presentation the ownership securities because we will be having another presentation focusing only about it. So let me present the other types instead. As you can see, debentures are categorized according to different point of views. So from the point of view of securities, we have secured debentures and unsecured debentures. From the point of view of the tenure, we have redeemable and irredeemable debentures. From the point of view of the convertibility, we have convertible and non-convertible debentures. From the point of view of registration, we have registered and bearer debentures. So from coupon rate point of view, we have specific coupon rate debentures and zero coupon rate debentures. So for more information about different types of debentures, I have another posted topic on our official social learning unit, or maybe I will upload another video presentation highlighting this topic. So moving forward, let us discuss some of the advantages and disadvantages of the retained earnings. We have mentioned previously that retained earnings are the portion of the business profits that are not distributed as dividends to shareholders but instead are reserved for reinvestment back into the business. So dahil hindi ito ipinapamahagi as dividend, nagagamit ito ng company and it will be favorable sa operations ng isang negosyo. I would like to reiterate that not distributing the dividends should have the consensus by the different shareholders. So number one advantage of retained earnings is the useful for expansion and diversification. So isa sa mga advantages ng retained earnings is that the organization will be having funds to be allocated for the expansion and diversification. When we say expansion or business expansion, it refers to the stages of the business wherein the company reach the point na kinakailangan nilang magkaroon ng other options to generate more profit. Diversification refers to a risk management strategy that mixes a wide variety of investment within a portfolio. In business and investment, diversification can be described as huwag mong ilagay ang lahat ng itlog sa iisang basket. This simply means that business should invest their money not only in one investment but to another investments. Para kapag hindi naging successful ang isa, mayroon pa silang ibang profit center or different source of their funds. Another advantage of retained earnings is that it is economical source of finance. So retained earnings are one of the least costly sources of finance. In this way, kapag ito ang naging portion or sources ng isang finances ng isang company, they will be having no interest payable and no debt obligations na kinakailangang intindihin. That can lead to the third advantage of the retained earnings, which is the company will be having no fixed obligation. Another one is the flexible sources So, retained earnings allow the financial structure to remain completely flexible. So, the organization have no problem about arising loans for further requirements if it has a retained earnings. Another one is that retained earnings increase the share value. So when the company uses the retained earnings as the sources of finance for their financial requirements, the cost of capital for is very cheaper than the other sources of finance. Hence, the value of the share will increase. Avoid excessive tax. So with this advantage, mas nakukuha ng company na makaiwas sa pagkakaroon ng excessive tax, lalo na kung kakaunti lang naman yung kanilang mga shareholders. So the last one is it increase earning capacity. So kapag ang company ay nagkaroon ng retained earnings na pwedeng magamit for expansion and diversification, the company can able to generate more earnings. So however, despite of these favorable benefits of the retained earnings, there are also the disadvantages. One of the disadvantages of the retained earnings is the misappropriation. So the management, by manipulating the value of the shares in the stock market, can misuse the retained earnings. Isa ito sa mga sinasabing disadvantages ng retained earnings. So the other disadvantages are the leads to monopolies, overcapitalization, and tax evasion. So before we end, I would like you to remember that the organization will be mobilized through different sources. These sources of fund are based on different categories depending on the needs of the organization. If the organization need to meet the short-term financial requirements or those working capital requirements, the firms can consider the short-term sources of finance. Moreover, if the firm needs to meet the long-term financial requirements or those fixed capital requirements, there is a long-term sources na pwedeng i-consider ng mga business firms. And that concludes our presentation. So if you have any questions about this topic, kindly notify me. Thank you very much and keep safe.